Hey guys, Bitcoin is hitting new fresh highs almost every day. In this video, let's take a look at some of the reasons behind this massive rally. And it roughly began when President Trump won the elections. Since then, Bitcoin is up almost 100%. Many experts and observers attribute this rally to the crypto week at US Congress. It started this Monday. The House of Representatives will deliberate on the three crucial bills. The proposed laws will shape the future of cryptocurrencies for decades to come. These bills are the Clarity Act, the Anti-CBDC Surveillance State Act, and the Senate's Genius Act. All these laws are part of the President Trump's pro-crypto agenda. The previous Biden administration was not exactly pro-crypto. The SEC appointee, Gary Gensler, had been a vocal critic of the crypto industry. He argued that most crypto tokens are securities and should be treated as such. Hence, he wanted the SEC to take a tougher stance on them. He approved Bitcoin and Ethereum ETFs reluctantly only in 2024, and that's after a prolonged lawsuit brought by Grayscale against the SEC that it won in 2023. In 2024, President Biden vetoed one crucial bill. It would have allowed financial institutions in the US to custody Bitcoin and other crypto. But with President Trump, things turned 180. Donald Trump made regular appearances at various crypto events. He even started his own meme crypto token, Trump, based on the Solana blockchain. The meme coin reached an all-time high of $75 back in January, only to crash later. For now, Trump coin trades around $10. But either way, it is hard to imagine any other president doing something remotely similar. Also, Trump signed an executive order early on to establish a crypto strategic reserve. Trump later appointed Paul Atkins as the SEC chair. Atkins plans to promote innovation and predictable regulations suited for crypto assets. All this bodes well for digital assets, at least for the next 3 to 4 years. Let's understand the crypto laws that Congress will deliberate on this week. And the first and most important one is the Clarity Act. The bill introduces a two-tiered system to regulate digital assets. The Clarity Act will consider certain crypto assets as commodities. And this is very important because, unlike traditional securities, commodities are, for the most part, exempt from that burdensome regulation. The law will allow certain digital assets to sidestep the registration with the SEC as securities. And that registration process by itself is very lengthy and stringent. Instead of the SEC, the CFTC will be in charge here. But there is a catch for crypto to qualify as a digital commodity. Its value must be intrinsically linked to the use of the blockchain. If not, any given digital asset will fall under the traditional definition of security. The issuer of such crypto will have to deal with the SEC with all the burdensome regulations and rules. The bill also defines the so-called mature blockchains. Mature blockchains are also exempt from the SEC securities regulation. Basically, a token issuer will have to jump through certain hoops. For example, he will have to show that there's no excessive control of token units. And excessive control is 20% or more of ownership by a single entity. The Clarity Act will also have certain carve-out exemptions for digital assets of a smaller size. For instance, crypto with sales under $75 million over a 12-month period will be exempt. The non-mature crypto can also take advantage of this exemption, but it will face a few extra reporting requirements. This is huge news for cryptocurrencies. It provides long-awaited clarity for regulating meme coins, cryptocurrencies, and other digital assets. But there's one more piece of language at the end of the bill that will play no less role in all this. Specifically, the Clarity Act will allow financial institutions to conduct digital commodities activities. It may also allow financial institutions to be custodians of a crypto. This can speed up institutional adoption of crypto even more. This is especially true for mature crypto assets like Bitcoin. The thing is that trading crypto through major brokerages is possible even today, but it comes at an extra cost for traditional brokers and dealers. They, for example, have to set up separate entities and go through extra compliance. And the Clarity Act will ease this burden somewhat. Many Democrats voiced their concerns over the Clarity Act, and here are their main issues. They say that financial institutions may shift some of their functions and asset issuance onto blockchain. This will allow them to dodge that burdensome regulation. We don't know if this will turn out to be true. For instance, Gary Gensler, the former SEC chairman, pointed to what Robinhood CEO Vlad Tenev said on this. Tenev said that it's much cheaper to run a crypto business than a securities brokerage. Democrats think that traditional safeguards will cease to apply to crypto assets. All this may lead to worse outcomes for investors when it comes to protections. The second bill under the consideration during the crypto week is the Genius Act. And this bill is supposed to regulate stablecoins. And stablecoins is a cryptocurrency whose value is pegged to certain asset. It could be US dollars or something else. The problem now with stablecoins is that little regulation applies to them. And yet, many people treat them as safe and cash-like currencies or assets. For instance, take Tether. It is the most popular stablecoin, worth almost $160 billion. In 2021, the US government fined Tether for not having proper reserves to back up its stablecoin. Also, Tether is known for not doing full-fledged audits to prove their reserves. In other words, there was some risk that people would not have gotten their $1 back from exchange of one Tether. And that was especially true if there was some widespread crisis or things turned nasty in the past. Now, things will change by a wide margin for stablecoins with the Genius Act. They will have to maintain reserves 1-to-1 in US dollars or other liquid assets. These other assets will likely be US Treasury bills. Also, stablecoins will have to conduct their audits and other anti-money laundering activities. All this will increase the cost of running business for Tether and others, but it will provide better protection and certainty for investors in the future. The US Senate passed the Genius Act on June 17th, so it will be next on the House of Representatives' agenda. But some researchers raised a concern. The bill effectively establishes stablecoin issuers as wholesale buyers of US Treasury debt, and it's very doubtful that they will hold US dollars for the most part, because US dollars bring no profits. In fact, Tether earns billions of dollars in profits from interest on US Treasuries. For instance, in the first quarter of 2025, Tether earned $1 billion in operating profits. Most of it came from the US government debt interest income. The Genius Law could further solidify the role of US dollar in the digital economy, but it can also bring unintended consequences. There's some possibility that with time, US Treasury debt market may be unable to absorb selling from stablecoins. If stablecoins explode in popularity, they can become a very large holders of US federal debt. And with that comes a systematic risk to US debt markets. For now, this looks like a decent problem, but it can bite back without a proper response from US regulators. And the final, third piece of legislation is the Anti-CBDC Surveillance State Act. The bill bars the Federal Reserve from issuing a central bank digital currency. It also prohibits the use of a retail central bank digital currency for monetary policy. The goal is to safeguard Americans' financial privacy. All bills will be put up for discussion and later voting if things go as planned. Many crypto experts point out that some of this legislation is long overdue. But either way, the institutional participation in digital assets will likely increase even further, and this alone can provide the necessary support for the prices of Bitcoin and other cryptocurrencies. If you enjoyed this video, give it a like, it means a lot to me and the YouTube algorithm. Also, subscribe to my channel for more content on crypto, investing and more. All the best!